Silver just tripled, and most people still have no plan. That is the real danger right now. Not the price going up, not the price going down. The danger is holding a winning position with zero exit strategy and letting emotion decide your future. Because here's what just happened. Silver went from the nobody cares medal to the everyone is a genius medal in less than a year. And when that happens, when a trade goes from boring to viral, two types of people get created overnight. The first group panics too early. They sell because they're scared of losing paper gains. The second group panics too late. They don't sell at all until the market forces them to. Today, I'm going to show you exactly how I'm planning to sell my silver in 2026, step by step, using one metric that cuts through the noise and keeps you disciplined when everyone else is acting insane. I'm not here to tell you what to do. I'm here to show you what I'm doing and why. I'm John A.G., and this is Silver and Golden Signal Lab. Now let's be clear. If you already sold some silver and you feel relief, good. That's not weakness. That's survival. Everyone has different goals, different bills, different timelines, and different stress tolerance. Locking in profits is not a crime. But if you're still holding and you're asking, okay, what now? Then this video is for you, because the market doesn't care that you were right. It only cares if you can stay right. And right now, silver is doing what silver always does when it finally wakes up. It moves fast. It moves violent. It moves like it's possessed. And it tempts you to make a permanent decision in a temporary moment. So let me rewind the tape for a second, because the story matters. Months ago, silver was sitting in the low 30s, cheap, unloved, ignored. Dealers had inventory. Nobody was bragging. Nobody was flexing screenshots. And then the currency machine kept running. Rates changed. Liquidity shifted. The stock market floated. The cost of living kept rising. And silver quietly did what it does when confidence in paper starts cracking. It repriced. Not by 5%, not by 10%. It nearly tripled. And the craziest part is what people told me after. Messages from viewers saying silver gains helped them clear credit card debt, wipe student loans, pay off a car, sleep better in retirement, breathe again. That's why I love this trade. Not because it's shiny, because it's real. Now, some people are mad they didn't get enough warning. I understand that feeling, but I need to say something blunt. The market does not send you a personalized invitation. It whispers first, then it screams. When silver was cheap, the risk was obvious. The reward was hidden. Now the reward is obvious, and the risk is hidden. That's the phase we're entering. So here is the core rule for selling silver without destroying your future. You do not sell silver based on dollars. You sell silver based on value. And the cleanest way to measure silver's value is to price it in gold. That's it. That's the whole framework. It's called the gold to silver ratio, the GSR. And it's the single number that keeps you from getting hypnotized by a $90 print on your screen. Here's how it works in plain English. Take the price of 1 ounce of gold, divide it by the price of 1 ounce of silver. If gold is $300 and silver is $33, the ratio is 100. That means it takes 100 ounces of silver to buy 1 ounce of gold. High ratio means silver is cheap versus gold. Low ratio means silver is expensive versus gold. Simple. And it matters because fiat currencies are not a stable measuring stick. The dollar is not money the way your grandparents understood money. It's a unit of account that is constantly being modified, diluted, and politically managed. So when people ask, is silver expensive, adjusted for inflation? I always laugh. Adjusted to which inflation? The official one? The fake one? The personal one? Nobody has perfect data for 50 years of purchasing power because the measurement tool itself is manipulated. But the gold to silver ratio gives you something better than opinions. It gives you a long-term reference point, a way to compare two real assets against each other instead of comparing a real asset against a paper promise. Over the last few decades, the GSR has lived in cycles. When it's in the 60 to 80 zone, that's generally normal. Not screaming cheap, not screaming expensive, just normal. When it spikes above 90, 100, 110, that's silver being left for dead. That's where the opportunity is created. Because the ratio is basically saying, silver is being priced like it doesn't matter, and that's exactly when it matters most. That's why, when the ratio was high, silver was an asymmetric bet. The downside was limited. The upside was explosive. And now, after this move, we've entered a different phase. The trade is no longer the same. The thesis has started to play out. And that's where discipline separates winners from legends. So here's my selling plan. I'm not dumping everything in one shot. I'm scaling out. Just like I scaled in, when the GSR compresses toward 50, I start selling. Not because I think silver crashes tomorrow, but because relative value shifts. Silver outperforms gold in the compression phase. Then, historically, it often overshoots. Then, in the next phase, gold tends to become the steadier vehicle. This is rotation, not liquidation. And this is the part that most people get wrong. They sell silver, and then they sit in cash. They think they're being smart. But cash is melting. Cash is the asset that guarantees you lose purchasing power slowly, quietly, and permanently. So when I sell paper silver, I'm not going to the sidelines. I'm moving into another store of value. I'm staying invested because I refuse to let the system tax me through inflation while pretending it's a normal life expense. Now I want you to pay attention to this because it's the mental model that stops you from doing something stupid. I am not selling because I'm bearish on metals. I'm selling because I'm bullish on math. And math says when the ratio compresses fast, the easy money has already been made. At that point, risk rises, volatility rises, and you want to lock in some of the win while the crowd is still celebrating. So I already started. When the ratio kissed the 50 zone, I sold a portion of my paper exposure. A chunk? Not a lot. Enough to pay myself, enough to reduce the emotional pressure, enough to make the rest feel like a free roll. That's the goal. When you can look at your remaining position and say, even if this gets cut in half, I'm still up, you stop being controllable. You stop being easy to shake out. Now, from here, it's incremental. If the GSR continues falling, I continue selling in tranches, 25%, then another piece, then another, dollar cost, averaging out. Because nobody nails the top. Not you, not me, not the influencers with thumbnails screaming, the top is in. The top is a zone. You exit across the zone. And if the ratio reverses and moves higher again, I can re-enter. Because this isn't emotional. This is capital allocation. This is a strategy game, not a marriage. Now let's address the question people keep asking. What if silver keeps going up? Of course it can. Silver can go to $100, $150, even higher. But if gold goes up too, the ratio might not change much. And if the ratio doesn't hit the levels I want, I may not sell the rest. Because again, I'm not selling based on a dollar number. I'm selling based on the relationship between the metals. That's the whole point. So if you're sitting there thinking, just tell me the exact price to sell, I can't. And nobody honest can. Because the dollar price is a moving target, the ratio is the compass. Now here's the second rule, and this one is critical. Paper silver gets sold first. Physical silver gets sold last, always. Paper is easier to exit, easier to rotate, easier to move in and out without premiums and dealer spreads and shipping and delays. Physical is different. Physical is the lifeboat. Physical is the thing you keep for the world that doesn't look like a chart. So no, I'm not racing to sell my physical stack the moment silver hits a headline number. If I ever sell physical, it's after I'm fully out of paper exposure. And even then, I'd probably keep a core position. Because I don't want to wake up one day in a capital controls environment with nothing but bank digits and good memories. Now let's talk about how to execute this without blowing yourself up psychologically. Because the hardest part of investing is not buying. It's holding. Holding while it's boring. Holding while it's hated. Holding while everyone laughs. And then holding again while you're up huge and your brain is screaming, take it now. That's the game. Your emotions will lie to you at both extremes. When silver was $33, it felt risky. Now that silver is near $90, it feels safe. That is backwards. The higher it goes, the more fragile it becomes. Not because the metal is fragile, because the positioning is fragile. The crowd piles in late. Leverage builds. Greed builds. And then a small move down feels like the end of the world. That's why I prefer a rules-based exit. Not vibes, not headlines, not fear. Now let me give you the simplest version of the full plan. Step 1. Identify the ratio zone where silver becomes expensive. For me, the start selling zone is around 50. Step 2. Sell in increments, small chunks, not all at once. Step 3. Rotate, don't liquidate. Move into gold or another asset you've already researched instead of sitting in cash. Step 4. Keep physical as your final layer. Paper first. Physical last. Step 5. Stay flexible. If the ratio reverses, you can rebuild the position later. And the reason I like this framework is because it forces you to stay rational. It forces you to act when you don't feel like acting. That's where most people fail. They buy when it feels good. They sell when it feels scary. They do everything backwards. This keeps you aligned with value. Now I want to ask you 2 questions, and I want you to answer them in the comments, because this is where the community gets sharp. First question. At these prices, are you planning to sell any silver this year? Or are you holding no matter what? Second question. What gold to silver ratio would make you personally swap silver into gold? Because your answer tells me whether you're running a plan or running on hope. And if you're unsure, tell me your ratio target. I'll reply. And hope is not a strategy. Now, before we go further, I need you to understand something about what happens next. The next phase of this move is not going to be smooth. It's going to be messy. Silver does not climb like a staircase. It climbs like a lightning strike. It rips higher, then violently retraces, then rips again, and the people who survive are the ones who aren't over-leveraged and aren't mentally overexposed. That's why scaling out matters. You take some off the table, you lower your stress, and you stop checking the chart every 5 minutes like an addict. Now right here, in the middle of all this chaos, this is where I'm going to say the line that makes copycats furious. And don't forget, subscribe to support the original work, and if you're part of the movement against copycats, comment John A.G. best so I can see you. Good. Now let's continue. There's another detail most people ignore. When silver gains are huge, the temptation is to lock it all in. But if you lock it all in and go to cash, you have another problem. You're now betting on a crash. You're betting you'll get a better re-entry. You're betting you'll time it perfectly. And most people don't. They sell, feel smart, then watch the market run another 30% without them. Then they buy back higher. And then they get shaken out again. That's how people get chopped up. So my approach is to keep my money working. If I sell silver, I move that value into something else that is also protecting me from debasement. Gold is the obvious rotation. Because when silver gets expensive relative to gold, gold is the bargain. That's the whole logic of the ratio. It's not magic. It's just mean reversion. Now, some people hear this and think, so you're saying silver is over? No, I'm saying the easy part is over. There's a difference. The early move from 33 to 90 is the expansion phase. The crowd doesn't believe it, the headlines don't cover it, then it becomes undeniable, then it becomes popular. And popularity is the enemy of good entries. So if you're late, you manage risk. If you're early, you manage psychology. Either way, you need rules. Now, I also want to talk about dollar cost averaging out because this is where people become perfectionists and destroy themselves. When you sell in increments, you accept you won't hit the absolute top, and that's fine. Because the goal is not to hit the top. The goal is to capture the move. The goal is to protect your life. The goal is to stop being a slave to volatility. If you sell 25%, then 25%, then 25%, you smooth it. You reduce regret, and you keep optionality. Now, what about rebuilding the position? Yes, I would buy silver again. Absolutely. If the ratio spikes high again, silver becomes cheap again, and the asymmetric bet returns. That's when you reload. Because again, this isn't identity, this is positioning. Now let's talk about the one thing nobody wants to hear when they're winning. Taxes. If you're taking profits, think through your local tax situation. Don't let the government surprise you. Profit is good. But profit after a shock tax bill feels like getting robbed. Plan it. Now, as we head into 2026, this is the bigger picture. We are not in a normal economy. We are in an era of financial engineering. Rates are tools. Inflation is policy. Currency is strategy. And hard assets are not optional in this game. They are armor. So even as I rotate out of some silver, my stance remains the same. I'm bullish on preserving purchasing power. I'm bullish on owning real things. I'm bullish on metals as protection against monetary experiments. But I'm also bullish on discipline. Because discipline is how you keep what you earned. One more thing, and this matters if you're holding physical. Spot price is not the whole price. When silver runs, spreads widen. Premiums explode. Dealers go out of stock even while the chart looks calm. That's why your exit plan cannot be a last-second scramble. If you wait until everybody is euphoric, you may discover there's no easy, clean way to convert physical back into something else without giving up a painful chunk of the move. So watch the real-world signals, not just the screen. If premiums stay high while spot dips, the dip is probably paper noise. If premiums collapse while spot climbs, that's a warning the frenzy is fading. And if you start seeing headlines telling you silver is too high, right as your friends start asking how to buy, that's usually late cycle behavior. Also, don't get trapped by ego. People turn a good trade into a religion. They start saying, I'll never sell. And it sounds strong until life happens. A medical bill, a job loss, a family emergency. Then they sell at the worst moment because they never planned for reality. My plan removes that pressure. It turns selling into a sequence, not a confession. And here's the psychological hack. When you sell a piece, you're not abandoning silver. You're buying freedom. Freedom from staring at candles. Freedom from doom scrolling narratives. Freedom from letting strangers on the internet control your heartbeat. That's what a real exit strategy gives you. It's not just money, it's peace. So here's my final message. If you're up big, breathe. You did something most people never do. You positioned early. You held through doubt. You earned the upside. Now don't ruin it by letting greed convince you the market owes you more. Pick your ratio levels, sell in increments, rotate into strength, keep your physical base, and stay calm when the chart tries to hypnotize you. Because the next move will be designed to shake out weak hands. That's the game. And if you're still here listening, it means you're not weak hands. So do me a favor, keep it simple. Tap subscribe if you want more clean strategies like this without the fluff. And I'll see you in the next one. Take care of yourselves, take care of each other, and I will see you in the next video soon.